Here we are back at Beyond Bandwidth, Leviton's podcast series where we dive into network technology's hottest topics. I am your host from Leviton Network Solutions, Roy Chamberlain. Today, Leviton's Mike Connaughton sits down with Vladimir Kozlov. Vladimir is the founder and CEO of LightCounting, an optical communications market research company which provides in-depth coverage of the current and future state of optoelectronic interfaces in the industry. Listen in as Vladimir and Mike dissect the industry demand versus technology limitations with regards to optoelectronics performance required in AI data centers and other leading-edge communications applications.
Hi, everyone. This is Mike Connaughton, Senior Product Manager here at Leviton Network Solutions, and welcome to this episode of Beyond Bandwidth. And I'm joined today by Vlad Kozlov of LightCounting Market Research. Thanks for joining us, Vlad. I appreciate it.
Thank you for having me, Mike.
Absolutely. For those that don't know who you are, do you mind taking a minute to introduce yourself and give the listener a view of your personal background and maybe as well kind of what LightCounting does?
Right. I'm a laser scientist by training, and I started my career in the industry during the telecom bubble. And soon after the bubble, I was encouraged by some of the leading manufacturers of optical transceivers and other components to start LightCounting with an objective to bring more transparency to the market for optical communications. And we started with collecting data on shipments of lasers, transceivers, other components from the leading manufacturers. And we're still collecting data now. Every 6 months, we get data from more than 20 leading suppliers to keep track of the market for transceivers. And we use that information to publish forecasts, to do technology analysis of the industry, to cover inflection points that we are observing in the market. LightCounting is still a small company. We only have 12 people, but we do have analysts in China, Japan, Europe, and the US as well. So we certainly taking advantage of all the communication systems ourselves, working from different parts of the world, covering the industry which enabled globalization, also benefited from globalization. And it has been a lot of fun, I have to admit that.
Yeah, it's good when it's fun. I mean, I got to say, I think I became aware, it might be 10, 12 years ago. I think it was an OFC conference. I was at one of your sessions where you were talking about one of your reports. And the thing that impressed me almost immediately is during one of your slides, you were probably talking about 40 gig at the time. I forget what the data rate was. But you said, last year we predicted this was going to happen and it was wrong. And this is why it was wrong. And this is what we're doing in the future to correct for that. And I had never seen a market analyst actually kind of say that out loud, that, the numbers didn't line up. And, you came up with an explanation and used that going forward, which for me personally gave me a lot of confidence in your reports. And, I got to say, as a customer now for a number of years, that's it makes me feel better about, relying on your data.
Yeah. Thank you for the compliment. And we're certainly trying to develop a more scientific approach to the forecasting. And, the first step in the process is collecting data on what the market looks like today. The second most important step is actually admitting that the future is unpredictable, but we can build models, we can learn from history to predict it. And you're absolutely right. Every 6 months, actually, we take our forecast from 6 years ago and we compare a 5-year forecast with the actual data we've collected from the market over the last 5 years. And learn from it, and we show it to the clients so they get a feel of what's more predictable, what's less predictable. For example, prices usually drop faster than we can anticipate, and we share our learnings with the industry because, as I said, we're trying to help we're trying to make the industry more transparent for the benefits of large suppliers, for the benefits of startups that are bringing new technologies. And as a former scientist, first of all, I'm trying to do a more scientific approach to market research, but also I'm fascinated with the technologies. So we're certainly encouraging new technologies to enter the market because ultimately everybody benefits. And for me personally, it just makes it a lot more fun.
All right, great. So moving into the topic at hand, this season we're talking about AI and AI data centers, kind of more specifically. From an optics perspective, this is like the greatest thing that's happened probably since the advent of the internet. In those internet bubble years, this has been a huge boom to a lot of vendors and participants. If we look at kind of macro issues, what are some of the things that you see happening now that are impacting whether it's your forecast or whether technology? How do you see it when people talk to you about the AI data center space?
Right. So, first of all, we've been tracking data centers or optics deployed in data centers since 2007. That's when Google started deploying 10 gig transceivers in their networks, and then they moved to 40 gig in 2012 and 100 gig 2015, I think. So we've been seeing those waves. Google was also the first one to deploy optics in AI clusters. And I think it was 5 or even 6 years ago when Google was sharing data with the industry on how much optics they're putting into AI clusters and showing that data traffic in AI clusters is growing much faster than in compute nodes. So we've been kind of keeping track of it for quite some time. Certainly what happened after ChatGPT, NVIDIA's revenues just went through the roof. And NVIDIA used a lot of optics in the past, but these were mostly active optical cables. In 2023, they shifted to using optical transceivers and started using a lot more of them because the clusters grew larger in size. And NVIDIA's architecture requires a lot more optics or a lot more connectivity bandwidth than Google's architecture. So it was certainly a surprise for me. I have to admit, we haven't expected such a huge jump in the numbers of transceivers sold last year. It was almost 100% growth for the market. So that's one of the things that's impossible to predict. Even so, we've anticipated continuous growth in demand for optics in AI clusters. The reality is always a lot more exciting than you can imagine it. So that's a good part of the story. Of course, what's problematic this year is the trade war and all the uncertainty related to it makes it more difficult for us to anticipate what happens, and certainly a lot more for the end users to plan ahead with their deployment projects and suppliers being able to deliver solutions.
Yeah, I can imagine. I can tell you from firsthand, just our own products. Whenever you're dealing, with the tariffs and how does that impact pricing, how does it impact costs, you roll that out into a global scale. Certainly, that's going to have an impact. You mentioned earlier, and you just over the long term of doing the report, people tend to be surprised by how fast prices drop, but nobody takes into account, or at least I'm not aware of anybody predicting that tariffs will show up 3 years down the road. That's a hard thing to account for, and it's a hard thing even here and now trying to predict what's the impact on volume over the next 12 or 24 months based on it.
Right. If you look at transceiver suppliers they've been getting ready for the tariffs. So it's not new. So Trump imposed tariffs during his first tenure as a president, and the industry is prepared for the tariffs. The industry itself, the supply chain for transceivers, companies moved their manufacturing away from mainland China into Thailand, Malaysia, Vietnam. Even so, this countries got hit by tariffs as well, which is now down to 10%, but still, 10% certainly matters. I think the bigger problem for our market and for transceiver suppliers is not transceivers themselves, but just the uncertainty that is in the air. And what we've seen in the past that um, the large companies like Meta, Google, Amazon, they pay attention to the business climate very closely, and they have no problems cutting down on their projects as soon as they see some uncertainty. Last time we've seen it was the middle of 2022, so just 3 years ago. I think before that it was 2019. So it's almost like a 3-year cycle. If you look at their spending, it goes through various periods of very strong growth and a lot of projects going on, and then they take a pause for a year or 18 months and then start accelerating again. And the problem is that when we see even modest slowdowns at the top of the supply chain, those fluctuations amplify as you go deeper in the supply chain because there's a lot of nonlinearity in the system. And for transceivers, a small change in investment could result even in a drop in sales for the year. And if you look at subcomponents like lasers, for example, the fluctuations are even larger. So we've seen, like back in 2022, we've seen shipments of lasers falling from millions per month to 0 per month during a single quarter. And that was just a minor slowdown with investments. So that's what concerns me most. And I think many of our customers are probably already seeing some of that impact of uncertainty.
Yeah, certainly for us being Leviton, on the cabling side of things, we're sort of adjacent to the transceivers. So it's kind of a different supply chain, but ultimately it's feeding the same end use application in this case. So we do see kind of similar, not as maybe, but not as striking kind of highs and lows, I think, as you see with the transceiver piece. But you mentioned lasers, and when I think of transceivers generally and the kind of power utilization, anytime anybody's talking about AI, they're talking about power. So can you see in your data, or is that something you look at, how people are dealing with some of the power challenges associated with AI architectures when they're choosing optics?
Yes. So power is a big issue, and it's not the lasers themselves, but it's the modulators and the DSPs, the digital signal processing, that contribute the most into power dissipation of transceivers. And the problem is, as we move to higher data rates, the improvements in power efficiency are tiny. In fact, if you look at the current solutions for 1.6 terabit transceivers, there was zero improvement in power efficiency compared to 800 gig. By the end of the year, we expect new versions of 1.6T transceivers that will give us maybe 10-15% improvements in power efficiency. But this is not enough for many of the applications in AI clusters, and specifically for so-called scale-up rather networks. So there's three networks within the AI cluster. There's a front-end network, which is more familiar to us, similar to compute nodes. There is a backend network, which includes scale-out application, which is supported by InfiniBand in case of NVIDIA, Ethernet. And then the scale-up is, in case of NVIDIA, it's NVLink connections. And the problem with NVLink, it needs 9 times more bandwidth than Ethernet or InfiniBand. So to get 9 times more bandwidth, you need 9 times more optics and 9 times more cost and power consumption. And people have the money, but getting enough power is a challenge. And even designing in such power-hungry interconnect is a problem because the main priority is increase the number of GPUs. So for a given power budget, the customers are trying to put as many GPUs as they can. So they're not willing to spend more than a few percent of power on supporting connectivity. And, typically optics accounts for like 3-4% of the total data center power consumption. But if you start using it for NVLink, those 3-4% could go up 9x potentially. But even if they go 2x, that's just not the way of moving forward. So that's why a lot of end users and NVIDIA, of course, themselves, they're looking at new solutions, linear drive optics, whether it's a pluggable or co-packaged devices. They're looking for new materials, new devices, because the industry clearly needs a roadmap, something similar to what CMOS has, because every CMOS generation does improve power efficiency. And that's where the optics needs to get to. So that's the inflection point we are looking at right now.
Yeah, I know from our standpoint, talking to kind of the switch vendors and bigger end users, co-packaged optics tends to be the kind of active topic of, I mean, it's real. People have demonstrated it, but, when is it ready to scale? And when is it going to be, I guess the same thing, debugged enough that it's got a reliability that people are willing to spend money on it and deploy it, in active gear.
Yes. And I think, it's happening. And to start with, we've seen deployments of co-packaged optics in the past, but they were limited to specific vendors, to specific projects. So it started with a US government-funded supercomputer back in 2010, when IBM, working with Finisar, built supercomputer with co-packaged optics using VCSEL lasers, because that was 10 gigabit per second. And to deal with reliability, I think they had to put a backup laser for every laser in the system. Then Fujitsu did deployments in their supercomputers probably like 5-6 years ago, again using Finisar's transceivers. IBM and Finisar actually completed a government-funded project building, or at least designing, a co-packaged optics with 100 gig per lane VCSELs. So it's been demonstrated it's possible to build. We haven't seen large-scale deployments, and I think that's what's starting now. Companies like NVIDIA, of course, have advantage, because if they deliver a fully integrated system to an end user, and a lot of their business with training clusters is actually like that. So, for example, Microsoft buys not just GPUs, but they buy all the switches, GPUs, all the optics, all the software, and then NVIDIA just ensures performance of the whole system. In this case, the end user doesn't take the risk of using co-packaged optics. It's NVIDIA that has to take a risk, but clearly they're willing to take this risk. So they announced the product, they're starting to ship it later this year, not in scale up, networks are starting with scale out, which is a less risky approach. But I think it's only a matter of maybe 12, 18 months before they start using optics in scale up applications, CPO in scale up applications. I think that's where they could really take performance of their systems to the next level. And they're working very hard to make it happen.
So if we look at the kind of the here and now, the existing transceivers, whether it's 400, 800, so on, what other changes have you seen? I know that you've, for the past, I don't know, couple of years anyways, you've segmented optics associated with AI clusters. What changes can you point to that you can attribute to the growth of AI clusters?
Well, I think the changes is that the industry is trying to go faster to the new data rates, and it's cutting more corners. So all the top customers have customized versions of transceivers. So they innovating on every opportunity, improving the performance, maybe cutting the cost in some points. So the industry is becoming kind of more diverse. Take an example, 800 gig optics. There's probably a dozen of different variants that are now being deployed. Even so, if you look at the standards, there may be only three product categories that go inside data center. But every large customer would have a couple of different sub-spec versions. And with 3-4 customers deploying it now in high volume, there's already a dozen of different variants, and we're probably gonna see more of them by the end of the year as other customers starts deploying it. So it's a very vibrant ecosystem, but it's profitable. As long as there's enough volume for every sub-spec, suppliers can still make a lot of profit. And in fact, last year, many suppliers reported record profitability. So that's actually a very nice change, because we've been looking at this industry and it's been rarely profitable. Once in a while it would be profitable and then it start losing money. But last year certainly been a record profitability, and with market fluctuations, it will not always be the case, but I think high volumes will help everybody. And we anticipate volumes moving from tens of millions now, if you take 400, 800 gig, to closer to 100 million units per year by the end of this decade.
Yeah, and that that kind of brings up almost the scary question when we see all these volumes and all this, to a certain extent, when the mainstream media is talking about a topic, it's big, it's got the outside world's attention. And if we look at this run up, and you mentioned your past in the internet bubble, I lived through that as well. I'm sure a lot of people listening went through that. How would you compare this to kind of what occurred during that run up in the late 90s into the early 2000s with what we're going through now? What do you think's the same? What do you think's different?
Yeah, so this year OFCs, there were a lot of discussions about it, because it's a 25th anniversary of the peak of the telecom bubble. I think OFC 2000 was kind of the high point. By 2001, things started to look differently, and then the industry uncovered a lot of fraud. If you remember, I think at the time it started with Enron, and WorldCom admitted that they were falsifying the numbers. So, when the financial markets grow year after year, companies get to the point when they do whatever it takes to keep their stock price going up. And sooner or later, we end up with some fraudulent statements, which at the time, companies could get away was partly because there was not much transparency in the market. Like, I remember I was working in one of the largest laser manufacturers. We couldn't figure out, what the total market is, because everything was growing, but nobody knew how many other companies are shipping, how much is actually deployed, what is the applications, what is the reason driving all this demand. So the industry was very young and very naive, so to speak. So the end users could do whatever they wanted to, and eventually they led the industry off a cliff. And we were just going blindfolded into that situation. The industry is a lot more mature. As I said in the introduction, one of the industry, LightCounting, was established and supported by suppliers, is to bring this transparency and be open about our forecasts, about the risks, which helps people think about the risk and the implications of, okay, if things going to start slow down, how it's going to look like. We also have 25 years history, so we can go back, and of course we have the bubble history itself, which hopefully will not be replicated anytime soon. But there were other slowdowns that we learned a lot more, and we're not going to avoid them. So even for this year, we're already expecting moderation in the growth. Even so, some parts of the market could grow faster than last year. I think overall the market is going to be more modest. So we know a lot more now, so we're more prepared. We're also more aware of the risk. If we look at the end users, none of them is on the brink of bankruptcy or anything like that. Like, WorldCom eventually had to declare bankruptcy. If you look at whether it's Meta and Google, yes, they have a lot of issues now with regulatory bodies in the US and Europe. There are a lot of concerns about can they sustain their leadership in the future. But if you look at their bank accounts, they have, I think collectively, they have like close to $1 trillion of cash. If you look at the top 15 cloud companies. So that certainly adds comfort to suppliers working with them.
Yeah, that's it's good to know that at the very least they can afford what they're buying. That's probably step one. Buy what you can afford. So what's next? What do you think is going to happen, in your crystal ball over the next couple of years that we haven't seen yet that might be significant?
Well, a lot of things, but probably the most important for us forecasting future demand is keeping track of new AI applications that are actually generating revenues. And there's some already. That's why Google has been using AI for a long time, because it helps with targeted advertisement, it helps with improving search engines, and these are cash generating activities. But we're looking for other applications that could emerge, whether it's factory automation or improvements in productivity, which are not related to factory operations. Maybe something new, maybe something that we can't even think of.
I'll tell you an interesting thing. 2 weeks ago, went on vacation with my wife down to Charleston, South Carolina. I happened to I was talking to the manager of the hotel, and he was telling me that he does not get involved in the rate setting for the rooms. He has an AI program that does it. And so day to day, room to room, there's some automated program that sets the rates. And I'm thinking, okay, that's pretty interesting. I hadn't heard it get to that level of granularity, but apparently for his business, that's been a pretty good boon.
Good. Well, that's good to hear, because we also have seen examples which are not so optimistic. And if you remember, I think it was 7 years ago when everybody was talking about self-driving cars and autonomous taxis, and financial analysts were counting, okay, how many trillions of dollars Uber is going to make by replacing all the drivers with autonomous taxis. And then it all crashed because and the reason I'm bringing it in, autonomous driving is all based on AI. But the problem was it's very risky because you have a human life at stake. And we've been actually always red flagging it, saying, are you willing? Are you forecasting $1 trillion market? Are you willing to get into one of those robot taxis? Or are you willing to put your kids into one of those robot taxis? And of course, it's proven to be a lot more difficult. Even so, the progress continues. I took a Waymo taxi in San Francisco just a month ago, and it's fantastic. I'm not
Same thing. I did the exact same thing.
Not letting my kids go there yet, but
I did a FaceTime video to show my kids what was going on while I was in that. That was, but you're right. I mean, that's just one of those things. Almost socially, I guess. People have to be willing to accept. What is the risk, and then to a certain extent have faith in the technology that the risk is lower. I mean, flying an airplane is safer than walking down the street. While statistically that can be true, sometimes emotionally that can be hard to accept.
Yes. I think, we, the humans, is the most difficult part of the innovation, because for many of us, and majority of us, it actually takes time to get used to new things and appreciate them and start taking advantage of it. And ultimately, a lot of things are connected to us, one way or the other. So there is this inertia which we have to be aware of. And, autonomous driving is a good example. But if you go back to telecom bubble, there were a lot of speculations about how quickly internet is going to change our world. And in many cases, it took an extra decade. And yes, it did change our world. It just didn't happen as quickly as people thought.
All right, good stuff. Any final thoughts? Anything that comes to mind for you that you don't think we touched on already?
Maybe just coming back to your comment on our forecasting. We only forecast for 5 years because forecasting beyond that is really difficult. And the reason is things change beyond of what we can even imagine, which is a problem on one side, but on the other side, it's actually fascinating. So if you look at the industry over the last 25 years, we went so far, so fast, that I'm looking forward to the next 25 years, because we're going to see a lot more interesting applications, a lot more interesting solutions, because demand for connectivity is not going away. It's changing, but the industry will find its path. So I think, we talked a lot about challenges this year, maybe next year, but I'm really excited about the next decade, the next 2 decades, or next 25 years, assuming I can live long enough to see it. But we're still in the beginning of this long journey. So it's going to be an exciting one.
All right, I agree with that. It's the especially when we're talking about AI, even though Google did it, start a few years ago. This is still the early days. People are still trying to figure out what it is, and then people start figuring out, all right, well, how can I use this thing? So it's exciting time to be in the industry, that's for sure.
Yes.
All right, thank you, Vlad. Thank you, everybody, for joining us, and we'll see you next time.
Thank you.
Beyond Bandwidth is a podcast series produced by Leviton Network Solutions. For more information on the topics we talked about today, as well as other enterprise or data center network infrastructure content, or to check out all available episodes of Beyond Bandwidth, visit us on the web at leviton.com/beyondbandwidth, or wherever you normally listen to podcasts. If you enjoyed this episode, we'd appreciate you leaving an honest review in your podcast application. Along with word of mouth, leaving a review will help others find our show. I'm Roy Chamberlain, and this was Beyond Bandwidth. Until next time.